the AI trade is like irrational.
Right.
It's definitely irrational. Like you can't really expect that these companies are delivering 200, 150% growth within 6 months. But a lot of people are going to get FOMO, going to caught up in it.
Yeah.
And unfortunately, I feel like a lot of them are going to get left with the bag. Like the retail investors are probably the ones who are going to get hosed the worst.
You are listening to the Connected podcast, coming to you from the heart of Taipei, in which we get personal on news and issues that matter to us all in Taiwan and around the world. My name is Tomasz Koper, and I use AI services maybe a few times a week for non-critical tasks that I have to verify anyway. So I would say that for me, AI is an interesting and sometimes helpful technology, although I also do recognize the future potential of these technologies in fields like material science, everything from that to medicine, let's say. Now, all that said, I am also astonished by some of the dollar amounts that are being thrown into the field. We're talking valuations, we're talking investments and infrastructure buildouts, and we're talking hundreds of billions of dollars. So many experts, many commentators, many analysts are saying that we are seeing the growth of an AI bubble. And that's why I have with me again in the studio, John, the voice and mind behind the channel Asianometry. And once again, we are hiding his face to not spoil us the surprise if he ever decides to reveal his face on his channel. And we're going to be talking about an AI bubble. So let me start with the very basic question. So we're on the same page with our viewers and listeners. Do you think that we are seeing an AI bubble?
Yes, I think it's. I think it was a lot less contested. It's a lot less contested now than it was, I would say, even last time we spoke, which was
a couple of weeks ago, when we finished recording the previous episode of the podcast. It seemed like, oh wow, okay, we have a hot lead. You had just come back from Semicon West, so I thought like, okay, we have to get this going as soon as possible. A few weeks have passed, and now everyone seems to be talking about an AI bubble. When you read those takes from big and small outlets, podcasts, it's everywhere. Do you agree with everything that is being said, or do you think that some people at least, are moving into fear-mongering?
I think that from the very beginning, there was discussion of whether there was a bubble, right? And I think there's a couple ways to approach it, which is that, yes, there is a bubble, but bubbles can differ in size. And then second, there's thinking whether or not this bubble so and such is bad, right? Or bad or good, or whatever you might say for the economy. And I think like in this particular case, you can make argument that it's not that particularly big yet. And then secondly, it's kind of constrained to certain parts of the economy. And then I would also argue that like there are people who identify and point to certain situations that you can say it's beneficial. It has beneficial aspects for the other parts of the economy that people will say is good.
So let's break down all of those things into component parts and see kind of what we can find out. You went to Semicon West, like I mentioned, and I assume had the opportunity to talk to all kinds of people in the industry. According to a recent Bank of America survey, 50% of global fund managers say AI is a bubble. 60% think that stocks are overvalued. Does that track kind of against the conversations that you had at Semicon West? Are people this pessimistic?
I think it's kind of interesting because on the stock side, a lot of the conversations that I had in Semicon West did not concern the stock market. Stock market necessarily, I would say, kind of it's up and down. It'll revalue, it's up value. I think since then it's been down. The AI trade has been down some percentage. There is a stock bubble to some extent. But then you have kind of more real world on the ground aspects of what we could call bubble. And I would say that has not played out yet. I think that there are interesting economic developments with regards to all the infrastructure that's being proposed. That's all the things that people want to build. And I think that a lot of capital has been prepared for surge of construction to accommodate AI infrastructure that people want to do. That is what a lot of people at Semicon West was talking about. They were talking about just all the investment flooding into building these data centers, how we're going to take advantage of it, how that has implications for technological development within the United States and the tech world, the supply chain. I think the general consensus was that that was going to last for at least 2 to 3 years.
2 to 3 years. I've heard 3 and 4 is what sort of people who invest in data centers, people who are sort of watching that space, are saying some of the companies expect their investments to last in terms of technology, right? Just buying chips. 3 to 4 years, we're going to run the same hardware, then maybe swap it out. But according to Jensen Huang himself, he estimates the useful lifespan of his chips to be 12 months before, obviously, he has an interest in selling more and newer chips. But technology has a habit of progressing very quickly and making previous iterations obsolete very quickly. Are these expectations for data centers to last like 3-4 years before they are obsolete and need to be updated and upgraded? Are those realistic?
I think that's like the depreciation question, right? The GPU depreciation question. If you think of you people in the stock market, like a couple fund managers have taken out short positions on Nvidia and whatnot, arguing that GPU depreciation is kind of the underlying argument for that. I'm not quite sure where I fall on that yet. I think there's a difference between saying like the accounting depreciation schedule versus the actual useful life of the machine, of the product, of the chip. I think that you can also make arguments. You can also do calculations to get a sense of how the useful cost per token generated for each of these chips as well. Like it doesn't necessarily mean a new chip generation does not necessarily mean that the tokens get cheaper. You know what I mean?
Right.
It depends a lot on local conditions, I would say, including, for example, the cost of power.
So not everyone is going to need possibly the latest and greatest from NVIDIA. People will still be okay with older chips for a while.
Of course. And I think those older chips, if the data center housing them still generates tokens economically at a profitable price, I think you can make the argument that they will continue to be used for years upon end. Like maybe, I don't know about 7, but maybe 3 to 5. And then you can definitely get your economic value out of that. So I think the argument on like a blanket argument of GPU depreciation is a tough one to make with regards to kind of this is going to all be like a house of cards or something like that. I think I think the people, you don't commit billions of dollars to spend to make a data center without kind of at least doing some spreadsheet math to get an understanding of that.
When you mentioned the short positions, I remember that Michael Burry of the Big Short fame has recently taken a short position against 2 big companies in the space. But let's talk about sort of the amount of money that is in the space and where it's going. There has been a famous graph that's been doing rounds on social media and traditional media that shows the circular nature of some of the investments going on. NVIDIA being in the center and just kind of having these back and forth relations with a lot of different companies, which seems an awful lot like they are trying to fund their clients so that they can buy chips from them, and round goes the circle. Do you think this is raising the risk of creating a bubble that will crash and burn?
What people are kind of thinking about is like vendor financing, right? You're talking about in the 2000s or late 1990s, 2000s, Cisco
and Nortel,
yes, funding. I think Cisco actually wasn't one of the bigger offenders. It was Nortel.
Yes.
Nortel basically giving money to certain companies to build fiber, and then, when the fiber was not used, it sort of all collapsed. I think the question is like, if NVIDIA is seeding these companies and OpenAI is seeding these companies, it really goes to the question of whether or not those tokens that are being generated are being used economically and being used sort of like in a way that can generate return of some sort. The argument that I heard when I was at Semicon West was that like, yeah, they are. Like people are using a lot of tokens, and then tokens are being consumed. And I think that's sort of the maybe part of the economic key that is kind of driving this AI boom bubble right now. And I think that is sort of the picture that maybe none of us really have a forward-looking perspective on.
Well, I mean, a lot of these companies are private companies, so their finances aren't exactly transparent.
OpenAI basically is not.
Yeah,
If it all centers on OpenAI and Anthropic and stuff like that, and we don't know necessarily what is it coming, like what is they doing, but like that makes it really hard for us to say, well, this is all going to fall apart.
We just have to kind of trust that the people responsible for these investments at these big companies, even the tech giants that are entering the space, let's hope that they know what they're doing and they actually have a clear view of the financial situation of the companies that they're investing in.
They're arguing that they do, and I think like it's kind of interesting because like their argument thus far that I understand is that like they have a shortage of compute, and because they don't have compute, they can't develop new products, they can't deploy new products, they can't make money from those products, basically those three things. And like they're saying, look, we can utilize all this new compute to generate ROI on it. That's tougher to, I'm trying to understand what that means, right? And like one argument when GPT-5 came out was that for a lot of people, GPT-5 was like, it was like this kind of thing. Like, that wasn't that much better than 4.0 and all that. And I think the thing that the people inside OpenAI were to say is that for the first time, a lot of people got exposed to reasoning, right? Reasoning models that were smarter, especially free users, right? They really focus on these free users. And I think the intelligence boost for them, they saw that as a huge gain. And I don't know what they mean by that, but like they think they can use all this compute in a way that will generate useful economic return for them.
Speaking of, generating revenue, OpenAI focuses still on free users who aren't paying. Their current paying user base is only around 5 to 6%. That's the number I was able to find. And they are apparently losing money even on the highest tier, the $200 per month subscription, because people apparently, according to OpenAI, people are using tokens a lot more than the company had anticipated. And yet they can't turn a profit even when you segment out only those like high tier subscriptions. Do you think they'll find a way to turn it around and make themselves profitable?
Probably by cutting NVIDIA's margin. That's my guess.
Oh, I see.
If you think about all the stacking of margins on different companies going up and to the very top of OpenAI is probably losing money. And then you have all the other companies are earning money from that. Well, you got to steal it from somewhere, right? So I think that's going to probably be a combination of like different chips combined with like their own internal made chips and stuff like that. And I think you could make an argument that like the economic situation is going to change over the next few years.
The space is definitely filled with paradoxes. On one hand, even the biggest players in the space are not yet profitable. They're not turning profit on the amazing technology that they have on their hands. On the other hand, we have 500 or almost 500 by last count that I was able to find unicorns. So privately held companies that are valued at least $1 billion in the space. So that indicates that at least the founders and investors who invest in those companies are expecting that demand to be there. Do you think that there is a space in the market for 500 unicorns, for 500 AI startups?
No. I think a lot of the $1 billion valuation is probably just manufactured by kind of some small portion of the stock, and like you can structure in so many different ways to make it look much better than it is. For those startups, that helps them recruit AI talents, which I think is super valuable for them because an AI talent is research talent or whatsoever talent is particularly high valued, costs a lot of money. I think I generally also think it's kind of like just like a prestige kind of thing too. I highly doubt that many of these startups are going to be successful. I've written before, I think that it does seem like a lot of that. Like if you haven't really broken out by now of some sort, it's going to be tough to kind of break out as that doing what is being done right now, right? That sort of part of the rush is kind of over. And I think that a lot of these companies are probably going to just get acquired.
Well, one difference that sets the current bubble from, let's say, the dot-com bubble of the late 90s and with a spectacular ending in March 2000. One of the main differences is that a lot of the companies who are investing in the space have solid financials and deep enough pockets to kind of risk some of that cash that they have on hand. We're talking companies like Meta. Do you think this is insulating us from the worst of the possible fallout if the bubble bursts, or does it, or maybe it just doesn't matter how rich the other revenue streams for those companies are if they invest so much into AI?
I think that like you could point it to both ways. I think like it goes to the question of like how long will you think these tech giants will believe that AI is going to be existential for them, right? It's like a race that they all have to win, right?
Right.
If the race starts, it's easy to say that when the race is like 5 different people are all neck to neck, but if it's like 2 kind of pulling ahead and 3 are sort of really lagging behind, people are going to start dropping off. Meta, we don't know yet, right? Because they have that new structure they have, right? But then there's other companies that may not necessarily be seeing themselves as winning, and then they're going to maybe start consolidating. You're going to start seeing a consolidating market. At the same time, when you have like when these tech giants have a lot of cash, like they can really kind of they can really stay in the market as long as they feel like they have to. You know, all the random bubbles that happen within Chinese consumer internet, right? Where you have like the ride share or the bike share or right now we're the food delivery where they're selling $0 bobas. So it's like, it's that kind of thing that I think may happen if this AI bubble gets a little too crazy. But if you think about that, then you won't have a stock market boom, right? Because it's kind of insulated within the larger structure of these big tech companies. Then the main pain would be related to jobs and stuff like that. And that, I think, is a risk, right? Like you have a lot of people investing their money, getting hired for jobs that may or may not be around within the next 4 years.
That is definitely a big concern, but it ultimately might affect only, and again, big picture stuff, a relatively small group of people. And of course, we're still talking thousands and hundreds of thousands of employees. But my bigger fear, and I'm curious to hear your take on that, is that the AI companies aren't really all that insulated from the wider economy. I mean, the stocks and the gains that we've been seeing have been really way too attractive to pass up on for a lot of investors, for a lot of funds that, even general funds that kind of try to spread out their portfolios. So much money is riding on this, and so much of it is also supported by debt. Not all of it is cash on hand from big companies that can afford it. That if even a part of that bubble implodes, it might have repercussions that go far outside of the tech space and reverberate again across the entire economy, much like with the .com bubble. Do you feel that if a bubble implodes in the AI space, can it be relatively contained to certain sectors of the economy?
Well, I want to say no and yes, right? Yes, okay. In the sense that it depends how long this bubble is going to last, right? What happens right now is that a lot of the companies, there are restraints right now put on growth in terms of how much is actually being spent, right? There's money being put in, but we don't know how much of it is actually being spent. The productive capacity of the economy is limited in certain ways by short factors that makes it tough to kind of really deploy all that money, right? So the one that people talk about in Silicon Valley is chips, right? Like a lot of people say we don't have enough chips to kind of deploy. That's probably more of an imaginary one, but that's also partially because TSMC and other chip suppliers are looking at what orders are coming in, and they've had situations before in the past where customers going to say and promise the moon. And that, like the Bitcoin miners, for instance, like they promised the moon, and then TSMC would conceivably say, like, well, okay, we'll go all in, or we'll build a new fab for you, and then by the time the fab's done in 2 years, the Bitcoin miners, or in this case, telecom suppliers of the 1990s and 2000s, are gone. I think there's been a lot of scrutiny on TSMC's management itself about like, why are they not investing more? That was like the first question they got in their earnings call, and like TSMC's. My opinion of what they're reading between the lines of what they're saying is that we don't think this is real. Okay. Like the crazy upper numbers of that, we don't think that part is real. The other side of that is like the power situation. You can see that there are certain power suppliers of turbine producers and stuff like that who simply cannot get equipment now, in some ways. They cannot get the equipment like turbines and stuff like that and fast enough. Like you have something like booked until like 2029 or something. And then secondly, also like they're not necessarily rushing to build up their supply chain to kind of accommodate whatever orders they think. And I think that's a hidden sign that says that they don't think this is going to fully play out as the blog boys sort of say they are.
Do you feel that this might become a self-fulfilling prophecy? Hardware suppliers on both, chips and energy fronts are not all in. They might be kind of dragging their feet a little bit. They're being cautious, very understandably so. But that delay, that caution will then cause the collapse, because that's going to be the bottleneck. That's going to be the trigger that causes an implosion.
It could be like, it could actually be like, I mean, this happens all the time in history. Like you would have 1 or 2 years, they kind of hold out, and then finally they sort of capitulate. And then very shortly thereafter, like the market sort of collapses because everyone, for whatever reason, maybe it's psychological, maybe it's just a timing thing, or maybe it's just like they actually do kind of go all in and suddenly they realize, it's kind of actually not what it is.
It is scary, or one of the more scary aspects to me of this entire situation is how difficult these things are to time. Are we seeing the beginning of the bubble? Is it going to inflate much longer? When is that collapse going to happen? And, who's going to be left holding the bag? It's really something that a lot of people who are a lot smarter than me have been trying to figure out, and it's more like fortune telling at this point. But do you feel that we are seeing just the beginning, or are we kind of closer to the end of this cycle, if you even want to venture that kind of guess?
I think what we need to keep an eye on is whether or not a lot of these projects in 2026 of these data centers start actually become like real, like they're actually putting shovels in the ground and actually digging, structure building. I think there's a lot of like talk, and I think until we start seeing things come online, the market is going to be a little skeptical, and I think the skeptics will need real proof for them to sort of dissuade themselves. I think we need to see OpenAI start coming out with maybe with more numbers, but more proof of revenues. They're saying they're going to hit 20 billion this year, and then we're going to need to see even more than that in the coming years. You need certain aspects of that to sort of that story to play out. I'm so far trying to stay zen about it all, because I'm thinking to myself, like, look, we should keep an eye on. First, make sure it's not our money being spent. And then second, like I keep an eye on the new technologies and infrastructure and capacity is going to come out of a boom like this, which is always, I think, it's the positive angle of aspect of that people should care about.
Are you personally invested in the AI space?
I am.
Speaking of, making sure not our money are being spent.
No, I am S&P 500. Yeah, I don't invest in that stuff. The AI trade is like irrational.
Right.
It's definitely irrational. Like you can't really expect that these companies are delivering 200, 150% growth within 6 months, right? Like Delta's up like what 130%. Like if you broke down the work that needs to be done to make a transformer, like you can't look at that and then conclude at the end like, well, yeah, I think this is
reasonable.
This is reasonable.
This checks out.
yeah, this checks out. But a lot of people are going to get caught up in it.
Yeah,
it's gonna be dirty a little bit in the next couple months. We'll see how it goes.
Yeah, I've been hearing from people who don't normally invest in individual stock, like they would kind of find other instruments, but people tell me, oh, I wish I had invested in Nvidia, a few months ago, or maybe I'll do it now. Again, people with no experience in investing personal funds. And my explanation for that is FOMO. Like they see these gains and they want in.
Right.
Which, again, I think is propping up or pushing the market up even more. These kind of like an entire host of individual investors wanting to get in on the action.
And unfortunately, I feel like a lot of them are going to get left with the bag. Like the retail investors are probably the ones who get hosed the worst.
It is what usually happens in situations like that. It's usually the small individual investors who lose everything. We mentioned that already briefly, but a big bottleneck that I see is energy. And we have companies trying to kind of skirt the environmental rules and just put in like gas turbines in their data centers while they're waiting for an energy hookup, because these data centers are, massively power hungry. OpenAI alone, I think, is planning over 20 gigawatts of new compute capacity. And it's crazy that these days we talk about compute capacity in terms of gigawatts and not in terms of actual compute. But this is what it boils down to. All of that needs power. And for context, for our viewers and listeners, 1 gigawatt of power is what an average nuclear power plant puts out. So, just OpenAI's plans alone would require theoretically 20 plus of these facilities, but they take years and years to build. Any kind of temporary solution can be put in right away, but permanent solutions like proper infrastructure, nuclear power plants, we're talking a decade maybe from idea to completion. And this is an optimistic scenario. So do you think that this is going to be a major bottleneck? I mean, definitely a bottleneck, but how crucial do you think that issue will be in the next few years?
First, there's going to be a buffer zone of sites that are going to be the data centers will go to where the power is at first, right? Like I remember earlier this year, I visited a site in Malaysia where they're basically saying
Johor,
Johor, and they're basically in the middle of nowhere, absolute middle of nowhere. The only reason it exists and the only reason they're only building it is because the power was already pre-allocated, right? Right now, getting power allocated now is going to take 5, 4, 3 years, which is still pretty fast. But like over in the United States, you're going to see some interesting situations where they're going to try to find pockets of power that are being used by something else, maybe that's not as productive, right? I think someone mentioned to me, like if you map out kind of where all the aluminum refineries are or aluminum factories, like you can see that requires a lot of electricity. Something they might do is that they find some facility and they take it over, right? And they take the power for that. And then also the data center doesn't necessarily have to be like near a populated center. So they're going to put it in isolated areas too, like really far out. They're going to build it there, and then what they're going to do is they're going to try to use some technology to maybe network them to overcome the distance issue, because the power situation is more urgent than latency, whatever. So I think you're going to see that play out over the next 1 or 2 years. What happens after that is you're going to need to see some aspect of new power generation coming online, hopefully by then, because I don't think this early buffer is going to last very long.
I intuitively like the idea of recycling infrastructure, as data centers taking over facilities that maybe have outlived their usefulness, but are still hooked up to electricity, and they have that capacity to hand over to the next technology. Hopefully that will happen instead of just mindless building of new facilities with no source of power in near vicinity.
I think something I've seen a lot in history is that like people make predictions about what will happen in the future, and then they take 3 or 4 dots and they draw a line, and I think that's it. It never happens that it actually plays out like they say it is. What happens is that efficiencies come in, the paradigm changes, stuff like that. I think like what we might see is maybe if you have something as urgent as an energy crisis, like in the 1970s, the structure of energy consumption and energy production changed, right? Like we had people become more efficient. And I think maybe that's what we're likely to see that in data centers right now, because new technologies like photonic interconnections plus cooling are going to really change the equation of how these data centers consume power. And I think you're going to get a lot more compute for the same amount of power. And I think that's going to change the prediction of what these are going to end up being.
That sounds like an interesting idea, or a good sort of scenario for the future. Kind of like what we saw with, for example, cars becoming a lot more fuel efficient because of that energy crisis in the 70s, with interesting geopolitical implications, because Japanese cars kind of really started to take off or become more popular because of that, because consumers just turned away from gas guzzling, cars of the 70s and 60s.
True that.
So let's hope for a more energy efficient data centers in the future. Two scenarios, possible sort of ends to the AI bubble, with one being an implosion, a violent end, and the other being more gentle, like deflation or correction. What would be the conditions necessary for the more optimistic scenario?
Did you forget that we might, the third option, which is we create a wonderful AGI society where there's plenty and then everyone just doesn't need to work anymore?
Of course. How could I have forgotten the most optimistic of scenarios with singularity kind of taking us all to the stars? But well, barring that scenario, which I would totally sign up for, I think that's the best future that we can hope for. Do you feel that there is a way to kind of like preemptively mitigate the possible future fallout from a burst bubble and instead make it deflate and the market correct over a period of time?
No. I think these things we need to accept that we get the bad with the good. And we're going to get some good stuff out of it, but there's going to be a lot of bad stuff out of it. I think the thing that I will be curious to see is that, like, if we can imagine a damaging financial bubble, it would be like .com. It'd be like the global financial crisis.
Yeah.
That was bad. That was bad because it affected people's homes, it affected people's livelihoods, affected people's jobs. I don't think it's going to be that bad. For one thing, I think it's going to be a bunch of very rich people also just like losing a little bit off their top, right? But what's going to happen is that we're going to have this fever for the next 1 or 2 years. Maybe at the end of the second year, as it becomes more clear that the economics are not what they are, or maybe need to be readjusted, what we're going to see is that filter through into the behavior of the companies within them. And then also we're going to see re-rating of prices. I'm fairly sure that the prices of these AI services are way, way underpriced.
I mean, most of them are free, or at least, that's kind of what most services do, including, what we saw in the early internet and then the more mature internet with social media, for example.
Or Uber.
Yeah.
Right?
I mean, no fees at first, or, PayPal. I mean, we could sit here all day and name services that started free and great for users until suddenly there was this gotcha moments like, well, now you have to pay for your transactions. Now you have to pay an extra to get an Uber, right?
Right.
Do you feel that this is where AI is headed as well?
Without a doubt. I think we're seeing here this immense sort of rush and race. And I think a lot of people are getting stuff for free, basically. And I think that's unsustainable. I think what will happen is that the economic players are going to come to their senses, and then prices are going to start rising, and then we're going to see a whole bunch of startups, maybe the larger ones that kind of just have this free service, take it all out, and then at the same time we're going to see these prices on subscriptions start to rise. And I think there's going to be a portion of people who are going to be like, that's okay because I use a lot of these AI services and I get my value out of them, and I'm okay with spending a lot more. Maybe not $200, maybe like $35, $50, stuff like that. But I also think that that's going to dampen use case across the general public as well.
What comes to mind is Cory Doctorow and his theory that has a name that I can't say on this show because we're on
I know
TV.
that one.
Yeah. So the process goes like creating a service that is great for users and attracting users that way, then changing the conditions so that it benefits the enterprises that you're sort of also servicing by inconveniencing users, and then inconveniencing both users and enterprises to benefit shareholders and just extract value. That process, however, creates a lot of resentment, and we're seeing people kind of really rethink their relationship with social media because the service has gotten substantially worse. I'm thinking of giants like Facebook. Facebook in the early days versus Facebook now. Are you afraid that ultimately the value for end user of AI systems will become so low, or it will come with so much additional stuff like fees, like inconveniences, ads? I don't know. Who knows what will happen in the future? That usage will drop off. And instead of kind of taking full advantage of this wonderful technology that we have on our hands, it will be constrained by all these layers of extra sort of services that serve to extract value for shareholders and other people except for the user, will that make AI usage fall off a cliff?
I think the genie's sort of out of the bottle with that. I think that like you're going to see, I'm curious to see what will happen as they try to monetize free users, right? Like, are they going, like there's talk about affiliate fees, there's talk about like purchases and stuff like that. They're already building towards that. I think it's going to be very curious to see how that affects the product, right? Like right now it's great to do a ChatGPT search as opposed to a Google search because a Google search is trash. But like, but a ChatGPT search right now
another example of that process where it started out great and it's now borderline unusable.
Exactly. But now like we don't know how fast that it probably will happen because I expect that there has to be work done to guide and generate revenue from that. I don't know how fast it'll be. I don't know how it is going to be. So it's like, it's just kind of, it feels inevitable. Hopefully that only affects the free products. And then the new products will just have to have higher, more expensive subscriptions, which is kind of, people will just have to eat, just like Netflix, because then they've already ensconced themselves within people's lives. Like if you can, I don't even know if the parasocial relationship with ChatGPT is like, can be given a dollar value, right? Some people see these bots as like friends, capital F friends, like real people. Like it's kind of, how much would you pay to get your friend back?
Exactly. Those might be the whales of the industry in a few short years. People who have developed, boyfriend-girlfriend kind of relationships with these bots.
Toxic dependency issues. We shouldn't laugh at them. Like you might,
we shouldn't.
Like this might happen. This is already happening, I feel, and I think it's gonna be interesting world that we live in.
I think it's more of a comment on the sort of isolation that we experience in modern societies than the technology itself. But yeah, a scary phenomenon nonetheless. Let's get back to AI and the space. Whatever happens to the bubble in the future, it is a fact now that, or at least that's my view of the situation kind of from the outside looking in, AI and related technologies are kind of sucking the oxygen out of the room for other tech ventures, with 50%, according to one data point that I found, 50% of all VC funding in 2025 going into AI. Do you agree that it's sucking the oxygen out of the room for other innovative technologies and other innovative ventures?
I think the interesting thing is that the story of OpenAI and ChatGPT is sort of driving investment to a small extent into non-traditional technologies, right? I think the thing that is positive, and I've said this before, is that the rise of coding as like a ability to produce a product much faster makes software startups less economical to invest in. And you will struggle to see as many software startups in the future as you see right now. That means venture capitalists will have to invest in other things. Right now it's AI, but I think after that it'll be interesting because we're starting to see money flow into robotics, flow into really speculative technologies like alt computing ideas, quantum, fusion, right? You're going to see these really weird stuff be invested in. I think that is a good thing. I don't want to be the guy investing in it, but that's a good thing in my opinion. That's good stuff. I hope they have like a basis in science and basis in technology and helping to create new stuff. And I hope a lot of this actually pans out because I remember a lot of the technology that was developed in the 1970s never panned out. But I hope that's the case, that at least it's lasts long enough, and that will be kind of like an enduring positive legacy of AI, because like if it helps get people out of the house, so to say, and stop, like people's dream should not be to code another SaaS product.
Yes.
Okay. That's just what I'm asking in life.
Do you think that this represents an opportunity for Taiwan, this kind of move of funding from software? We're going to see a lot less of that to hardware, because Taiwan has historically performed a lot better in hardware rather than software?
I think it is. I think it's a great opportunity. And I think the thing to say is that, but there is a balance, because I think Taiwanese entrepreneurs of a newer generation don't quite know what it is like to run a globally competitive company, if you know what I mean. Mm-hmm. I think one of the things that I'm kind of interested to see is that over the past 20, 30 years, you've not seen the rise of new large companies in Taiwan, while at the same time, the ones that have kind of predated a certain time period, the older ones have become larger than ever. I would love to see the rise of a new technology company in Taiwan that is led by like a new generation of founders. And I think that needs a interaction between people in the West and Taiwan as well, because I've seen the venture startup space in Taiwan so far, and I feel like it needs like another level of hitting with a hammer.
Yeah, and it needs a Series B and C. I mean, like
exactly.
It's all early stage funding. All around here. Yeah,
I think it's small companies that don't quite know what they're doing. They're building something, but they're not building to a standard. Unless a customer shows up, the customer won't show up until you have built something good, right? My hope is that, if anything, this attracts more foreign capital into Taiwan that can not just be just dumb money, but also just actually raise up the quality of the companies here. Because right now I feel like the quality of the companies, and I've been in the Taiwan venture space for the last 10 years, and I felt like there's always there's a cut between like American startups and Taiwanese ones.
If it were up to you, what would you do today, sort of in terms of setting policy and changing the conditions here to prepare Taiwan to face this kind of new future a little better?
There's nothing I can personally do, right? I think one thing that would hopefully do is that there's a success. You need just one or two, those really big successes to really create that sort of hub to spin off a lot of energy. Kind of like how SpaceX's success really spun off a whole generation of new startups because the company's culture was like very entrepreneur and then showed everyone what is it like to be really, really good. And so far, we have not quite seen that. Right? The interesting thing is why TSMC has not spun off a constellation of startups. It could be because they buy them up, or maybe it's the trade secrets, or maybe just the fact that you're just working in semiconductors. It's not fun. It's not a fun place it's not a fun place to invest in. You know what I mean? So, that's what I'm kind of would love to see. I would like to see a SpaceX-like success in Taiwan that sort of everyone can sort of like point to and start an ecosystem, a cluster around it. And that's they're very wishful thinking, I know, but that's my hope.
Well, let's hope for a SpaceX-sized startup in Taiwan that will show other entrepreneurs and other startup founders here the way. And until then, thank you very much, John, the voice and mind behind Asianometry. Thank you for being on the show again.
It was a pleasure. Thank you for having me back.
And to our viewers and listeners at home, let us know in the comments what could be your country's next SpaceX-sized startup. While you're down there, you can also check out our main show connected on TaiwanPlus that you can find on our YouTube channel and the TaiwanPlus website. Once again, I'm Tomasz Koper. Talk to you next time.